Hello traders everywhere, Jeremy Lutz coming from the digital studios of Market Club, and we have a record fresh close for the S&P 500 this week as it crossed 4,000 for the first time in its history, rising 1.2% on Thursday to a fresh record close of 4,1987, up 1.1% for the week, ultimately pushing the chart analysis score to plus 100 with green trade triangles across the board indicating that we are in a strong uptrend. And even further out on a quarterly level, because as we wrapped up the first quarter of 2021, the S&P 500 was up 1.1% in the first quarter. So even as tough as the last couple weeks in March seemed with the sector rotation out of tech, we're still looking in good shape heading into the second quarter of 2021. Key level to watch for the S&P 500 will be 3,853.50. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the S&P 500. Dollar index, not to be outdone, up about 0.2% on the week, trading at 93.01 with a chart analysis score plus 85, indicating that we're in a strong uptrend for the U.S. dollar. And on a quarterly level, the U.S. dollar actually gained 3.6% for the first quarter of 2021. And as you can see, that steady rise that we've had. Key level to watch will be 91.30. A move below that level would issue a red weekly trade triangle, indicating a move back to a sidelines position for the U.S. dollar. Dow Jones, as I mentioned, finished in positive territory for the week, up about 0.2%, trading at 33,153.21 with a chart analysis score plus 100 with green trade triangles across the board, indicating that overall we are in a long uptrend for the Dow. And on a quarterly level, it was able to eke out a gain of about 0.5%, so not as good as the S&P 500 or the NASDAQ, but it is in positive territory for the first quarter of 2021. Key level to watch should be 32,071.41. A move below that level would issue a red weekly trade triangle, indicating a move to a sidelines position for the Dow Jones. NASDAQ finished the week up 2.6%, trading at 13,480.11 with a chart analysis score plus 75. So even though we're in a sidelines position with that red weekly trade triangle, we are gaining strength to the upside. Key level to watch, 13,620.71. A move above that level would give us a green weekly trade triangle, indicating a move back to a long position for the NASDAQ. And on a quarterly level, it was able to gain 1.7%. So even as bleak as it seemed for the NASDAQ over the last few weeks, is still able to put a positive gain to the start to 2021. Move along to gold, currently trading down on the week about 0.2%, trading at 1,726.50 with a chart analysis score negative 55, indicating that we're in a short-term sidelines position for gold. Key level to watch would be 1,677. A move below that level would issue a red daily trade triangle, indicating a move back to a short position in the short-term time frame for gold. On a quarterly level, though, gold was able to gain 1.2% in the first quarter of 2021. Crude oil able to get a gain back after 3 straight weeks of losses, trading at 61.45, up 1.1% on the week. However, chart analysis score remains negative 60, indicating that we're in a short-term downtrend for crude oil. And your key level to watch should be 61.75. A move above that level would issue a green daily trade triangle, indicating a move to a short-term sidelines position for crude oil. And on a quarterly level, had a big gain of plus 3.2% for the first quarter of 2021. I'll back out of here and take a look at Bitcoin. Bounced back after back-to-back weekly losses with a gain of 6.3%, trading at 59,358.76 with a chart analysis score plus 100, indicating that we're still in a long-term uptrend for Bitcoin. On a quarterly level, had an outstanding 101% gain for the first quarter of 2020. Just absolutely phenomenal. Key level to watch will be 50,360. A move below that level would issue a red weekly trade triangle, indicating a move back to a sideline position for Bitcoin, With that, every success. I hope you have a great holiday weekend, and we'll be back next week with a market update.